Hello there, Adam Gower here, and welcome to the GowerCrowd Podcast, the real estate crowdfunding show Deal Time, where you can learn about active crowdfunded real estate deals directly from the sponsors themselves. Subscribe to my free weekly newsletter at GowerCrowd.com, where you'll get links to the podcast, as well as news and updates exclusively from the world of real estate crowdfunding. Sign up at GowerCrowd.com so you don't miss out. Also, if you want to pitch your deal on the show, just go to the podcast page at GowerCrowd.com and look for links on how to submit your deal. Please note that while I don't endorse the deal, sell securities, or make investment recommendations of any kind, some sponsors are GowerCrowd clients. Now listen in and learn about the next great deal on the GowerCrowd Deal Time podcast. Here we go. Dan Krzyzanowski, thank you so very much for joining me on the podcast today. Just checking everything is running. It is. And you are going to be talking about, this is actually a very interesting deal here. You've got BV Archway Real Estate Income Fund.
Yes.
Dan, what I wanted to ask you straight away, actually, first of all, introduce yourself. Name. I got it right, I know, but name, company name. What's your position over there? I'm not even sure what you do over. Let's start at the very top.
Sure. Dan Krzyzanowski, advisory partner for BV Capital. BV Capital is a broker-dealer tied in with Bridgeview Real Estate and our friends at Archway.
And you are an advisor partner, which suggests that you have a day job.
Well, yes, but my day job is evangelizing, much like you, this beautiful world of passive investing, and I love it tremendously. Advisor partner is just a very fancy way to say, I'm the guy that wants your money to come into our fund, and I'll teach you a thing or two, especially if it's coming from your retirement, or maybe this is your first time being a passive investor.
Fascinating. All right, so tell me what you got. What high level? What is the fund all about, Dan?
Yeah, so this is a bond wrapped in real estate. So, for folks that want to get equity level returns with that comfort of, say, a AAA corporate bond, this is it. And I say this as somebody that is a fellow LP investor in dozens of deals that, I like to joke, in some ways it's as boring as it comes because it really has that security. And part of it is just, it's the asset class, it's industrial. I know a lot of press on multifamily. Our good friend Chris Benson, self-storage. This is probably less sexy than storage, but just as good in profitability and just as secure when you really look at it.
Wait a minute, you've got something less sexy than self-storage. The mind boggles. So come on, tell us, what is it? It's triple net, is it? Tell us what.
It is super triple net lease, and that's why I have all these fancy colors here at my favorite shop.
Super triple net? Come on, Dan. What does super triple net lease mean?
Yeah, well, there's not just thing as super, but every property in this fund is a triple net lease. Just to back up real quick, industrial. What I love about it, storage and the rest of the asset classes, you draw a 135 mile circle around it. In industrial, you draw an 8-hour circle, which it is exciting when you really say, well, okay, Texas, it's huge. This is basically a Texas fund. We could go to some other Sun Belt. And this is for goods that are moving. And in an 8-hour circle, where can something go from Dallas, from El Paso, from the border, from Houston? So when you look at all that and you really understand what industrial is, everything from a showroom, like a Floor and Decor, Northern Tool, where the folks in the trades work, to of course, anything that touches e-commerce distribution centers, to something like a Loomis, which holds probably billions upon billions of dollars. It's a big metal safe in El Paso. These are things that are not going anywhere. Even though I'm here in Austin, everything's hip and fun and exciting. In the industrial space, it's not like a tech company that's going to pick up from, say, California to Texas. And guess what? We're already in Texas. So all of the business benefits, all of the tax benefits, no income tax, et cetera, for employees. So I share with this because this is each property is not only triple net, which we all know about the CAM that goes behind that. It's also mission critical for the business of the properties that we own, that are our tenants, that pay us money, that we in turn pay out monthly distributions, very tax advantage to our investors.
That's really interesting. All right. So give me some examples of the kinds of tenants that you have, because triple net, I mean, you kind of gloss over some of these terms. It isn't that easy to understand, but if you understand who the tenants are, it might help. So tell me something about who they are.
Sure. So I touched on one. So Loomis. So you probably see the big trucks going into the ATMs. That is one of our tenants. There's a property they've been at for decades. A required certain Department of Defense certification. In short, it's mission critical for their operations. It's not going anywhere. Let me go to the other side of the state, then I'll go in the middle. In the greater Houston area, these are showrooms. So I'll stress, this is not retail. It's not Home Depot. We're not competing against Amazon. We're not that foolish nor do we want to say we rent to Amazon at like a 3 cap or 2 cap. What this is we're folks that are in the trade. Plumbers, for example. Crazy demand every year in Texas, especially with the snowstorm. What did folks do during COVID? Well, they fixed their kitchen, their bathroom, etc. Folks that go into a floor and decor, which has doubled in market value in the last, year or so. It's still a very, once again, this isn't a mom and pop that's going in. These are folks that are in the trade. So these are kind of the two extremes. And then in the middle, probably what's most common is like your distribution center or somebody that likes to say makes stuff and has 5 to 10 buildings on this particular campus. So take one like a Geodynamics. They have over 120 patents. They sell to the oil and gas space. We own 2 of the buildings. And if you remember back to your college days, how you had to show your ID to get to all the fun stuff at the back, we actually own building 1 as you come through. And then of course, something else that makes something really fantastic in the back.
All right, Dan. So what are the scale of the buildings in this fund?
Yeah, so I mean, it can vary from, a single property so if we look at the pipeline, it could be a single property that is in multiple locations, something that is kind of a legacy location, or something that's going to be, as I shared with Geodynamics, a much larger sort of where it's truly like a campus. The big thing I do want to point out here, each of these are mission critical to the operations of the operating company. So what I do stress about something as industrial is, once again, it's not, especially with this fund, we're not competing directly against an Amazon. And by default, it's tough to really pick up, an industrial property and move it per se. I mean, there's a lot that goes into it. A lot of the tenants, whether it's our tenants or otherwise, are probably putting in, X millions of their dollars from kind of a built to suit sort of perspective, because they're making this their home base. And not just for, frankly, 10, 15 years, probably multiple decades. So, to think on the finance side, what we do, which I think is, I talk about why do we call it a bond wrapped in real estate? A lot of these properties are on a 10-year, 15-year lease versus the duration of our fund is only 5 years.
And so is mission critical. We need to talk about numbers.
Yes.
Well. I was asking the size of the buildings. I'm interested in what kind of scale the buildings are. Are they 10, 20,000 square feet, 50? Are they hundreds of thousands of square feet? So tell me a little bit more about the overall investment philosophy, scale. And you talked about mission critical couple time. So is that a driving criteria when you find a building? And are you buying buildings? Are you just tell me about the fund itself overall.
Yeah, the fund itself overall. So yes, it is going to be some existing properties. There could be a tenant that we have worked with before, comfortable. It's a built to suit where we're hand in hand with the particular tenant. Some could be in the tens of thousands, others could be in the hundreds of thousands. So it could be a much larger space. Ultimately, it's, when I say mission critical, it is for the operations of the company. So if you are making something, as I said, and you put in X million into these buildings, it is critical that you have access to these buildings to make your widget to be sold or distributed out to the market.
So the fund, how big is the fund?
Yeah, so the fund, great question, going to be a $50 million. It's a 506C, meaning accredited investors only. Shares are quoted at 250 for newer relationships. We're happy to go down as in the 50, 100,000 range because we do view this. BV has over 500 investors, and we do view this as a long-term relationship that we do want to have because there is stuff outside of this fund that we have participated in before. The economics, let's just use a simple $100,000 investment. It's a monthly distribution. It's coded as a return of capital, which from we joke that it's a half muni. So meaning your distribution stream, your 583 a month, is going to be very likely that you may not pay taxes on this distribution stream. And then on the end, we do have a back end split. And I will preface before sharing about the split is that the GPs in the deal are not taking any fees on an ongoing basis, which I know is different than maybe say a typical multifamily sort of thing. So nominally the back end's a 50-50, effectively is a 70-30 when you take into account there's no 2 and 20, there's no acquisition fee. Many of the fees
Dan, what's the pref?
Yeah, the pref is a 7%.
A 7% pref to a 50-50, but no fees at all. No acquisition fee, no management fee, no exit fees.
No, there's a nominal for the property management side that a side Archway company does, but they do it at cost, lower than market rate. But yes, a lot of the acquisition, disposition, construction, a lot of the typical fees are not in there. So when you do the numbers, I'd say another way is think of it as, and I'll give a range, call it 12 to 16 IRR. Very tax advantaged over 5 years.
Right. So, and you mentioned a broker dealer, or at least I read that somewhere. So is somebody getting broker dealer fees for the raise?
No, that's another thing too. There's no fee. So BV Capital is the broker dealer here. So it's so with the relationship, no, we're not taking a lot of the typical fees that if you were to go to, a big name, say broker dealer.
But there are fees though. BV Capital is charging a fee to Archway, presumably for capital that it raises.
No, they're not. That's what I said. A lot of the typical fees that you see in the structure are not, there's certain, nominal things that we'll have to do to stand up a fund for compliance reasons, of course, that are there. But no, a lot of the typical fees are not in there. And I would also say, the BV side and the Archway side, we'll probably see at least $1 million, probably be $2 to $3 million of our own equity going into the $50 million.
Right.
So there's a lot of confidence in this. The best analogy I can think of is almost, for a seasoned startup when somebody is on their, kind of doing the game again with that confidence in their offering.
So we have BV Capital is raising the money for Archway. It's a $50 million
the BV Archway Fund. Yes,
BV Archway Fund, and it's an industrial triple net lease industrial fund. It's $50 million. So have you raised money yet? Have you populated the fund with assets yet?
Yes, we have. We've done a very, I'd say, quiet friends and family raise for the first $5 million to come through. So floor and decor in close to the Bush Airport, for folks that know Houston well. That is the first property that has come through. You'll see in our book, there's 4 other properties I like to say are fully baked, meaning Archway has fully identified that they'll be coming in to the fund at a slight discount on a rolling close basis. So property number 2, we're just a few $100,000 probably by the time this gets published. Property 2 will be in. But what I would say, as I said, we have some pretty bright folks on the banking and underwriting side that I like to say as an investor, you're getting the day one benefits. And by day one, you start accruing on the day, and then the following month, you'll receive your first distribution. Which I think is pretty nice. So, there will be times, of course, where there'll be a little more money than actual, properties. We get that. These guys have been around the block a few times. So the benefit, there is a peace of mind for the investor that, July, August, September, you'll keep on getting, that 7 pref annualized.
Is there any value add, or are these all coupon cutters, Dan?
Yeah, great question. And, the nice thing is a lot of the lease terms, a lot of the rent terms, they're out there for 5 years, 10 years plus. So there's only so much to do, to be honest with you. It's not like, hey, we're coming into, like, for example, separate offering. We had a workforce housing project that, of course, there's a whole lot to do. Not as much as this. I would think of this more, once again, it's to replace the bond cash portion of your portfolio. It's pretty predictable. There's probably a few things that, we will do to be wise, and especially on, it's a very good chance when we exit, it'll be a sub 50 LTV. So from, say, on the finance side, there's things that'll boost up the returns a little bit more. But you're not talking about like crazy tenant improvements that needed to be done, or, bringing in a, much like you see in multifamily, kind of a new class of tenant. It's just different on the industrial side.
And what is the projected IRR? So you got a 7 pref and a 50-50 split. So there's presumably, and no fees. So the sponsor must be anticipating some capital appreciation. So how is that? How are you doing that? If
Yeah,
triple net leases.
totally. So I mean, I'll give a range. You're looking at a 12 to 16% conservative range overall for the IRR over a 5-year period.
Okay. And how are you doing that though? If you've got base leases with predictable rents,
sure.
And where's the capital appreciation?
Yeah, so a lot of it is, and something I learned back on the aviation side. It's a lot to do with the buy price, to be honest with you. So, the benefit here is that these properties were identified, purchased, contracted, especially the first 5 properties already noted, at pre-COVID prices, at pre-COVID levels. So, with that, we very conservatively, for example, I think the likes of a Floor and Decor may have been at a 7 cap, and we feel confident that we can sell this at a 6 cap. And this is before, frankly, I think with the original, call it 5 properties, I'll call it in a way kind of the COVID bump to the industrial side that I think, we are going to see. Now, that said, we have to buy in this market. We do get that. So that's why having the benefit of the Archway team with over 40 years track record in Texas industrial per se is very helpful. The second thing is on the debt side of things. The amort sides are very favorable, or the debt we're incurring. And as I said, we're also, based on pro forma, could exit as low as a sub 50 LTV. So that's how we see a comfortable ride getting towards exit.
All right, and you touched on it. Just tell me briefly, what is the what credentials who is the sponsor, and what are their credentials? I should believe they can to this.
Yeah, for sure. So Archway, I like to say they're the industrial guys. Ex Trammell Crow, for those from Texas, that'll probably mean something. For Archway in itself, they've done over 40 properties in the past decade. And a lot of it, pretty much all of it, has been done in Texas. So these guys have been boots on the ground, their relationships, who they work with, for multiple decades, for Archway itself for over a decade. So that's, I think a certain sort of peace of mind. It's not somebody trying to get in here for, the first time. So I'd say there is a nice thing about this, there's always discussions of the pipeline. If, call it the next property is going to be, a relatively smaller in the 2 million, or is this going to be a 10 million range as we approach the $50 million? We'll, of course, be smart about how, we invest our investors' money.
2 last questions. One, please. Exit structures. What's the exit plan?
Yeah, sell to a portfolio. We're going to sell the portfolio, to an institution, possibly a REIT, private REIT.
Any other? Is that like ones if that doesn't happen?
Great question. I mean, we feel confident in that. As I said, I guess if you had to say a worst case scenario, we would cash flow on a little bit longer, but we've been in conversations, with some folks on the family office side. Some, that said, and generally speaking, an insurance company tends to not prefer to underwrite a fund, but kind of in this broad network of this and pensions, if somebody wants something stabilized, I talked to a few pensions last week, and even our pref alone is greater than their hurdle. So, I do think there would be, if for some reason the institutional REIT market dries up, which I think will be unique for multiple reasons, I do think there's folks, this will be a very stabilized, comfortable portfolio with relationships that we have that we would still be able to cash flow out. But, once again, the incentive and based on the track record and being that this is not BV's first fund, I do feel confident in that exit.
Right. Last question. And
Please.
So I love to spin the clocks backwards.
Okay.
And imagine, if you would, that we are actually on a live radio show, not a podcast, where somebody can stop and start it and listen whenever they want. And under those circumstances, just for one moment, figure that the most important prospect is tuning in right now. Mm-hmm. The only thing that they're going to hear is what the last few sentences that you're going to utter. What would you want them to take away from this broadcast?
Yeah, that we offer you a bond wrapped in real estate, equity level returns at the comfort of a AAA corporate bond that will provide monthly distributions at a very tax advantage basis and a cherry on top at the end.
That sounds good. And I like the cherry. That sounds good.
You like the cherry?
Some ice cream.
Yes, sir. Let's do it.
Dan Krzyzanowski, thank you so very much. What an enormous pleasure. Who do we owe this pleasure to? Actually, Jordan, I think, right? Wasn't it Jordan that introduced us?
Jason Grix.
Jason. That's right. That's right.
And the folks from our friends at CrowdStreet coming to join me in Austin, Texas. They are great folks.
Oh, and, that's right. Have you been in touch with those guys?
Yes, I've been fortunate, and I'm just super excited for coming to town. So.
Fantastic. Yes, that's right. En masse from the looks of it, I think.
Yes.
Very nice. Dan, thanks so much for joining me today. It's an enormous.
Thanks, Todd. Such a pleasure.
If you want more information on this deal and on all the others in this new series, plus if you want access to the latest news from the real estate crowdfunding industry, and if you want to be the first to know about some amazing proprietary industry data that we're putting together for you, subscribe now to the GowerCrowd newsletter at GowerCrowd.com. It's totally free, and it is the most comprehensive source of news and information about real estate crowdfunding anywhere on the planet, all there at GowerCrowd.com. Thank you for joining me and for listening in to today's deal. This is Adam Gower wishing you well and signing off.